What's up, everyone? I think I finally have enough time to actually attempt to start trading again. So, obviously, a good place to start, for me anyway, is going to be with the core logic. Now, I'm sure most people know what that is, but if you don't, then I'll go over it briefly. It's pretty simple, not too much to look for. It's a very persistent and consistent strategy. You just have to look for a few things, and we'll get into that now. So, what is the core logic? Well, it's a market trading strategy specifically for options. It can work for shares too, just not as big of a return, obviously, and it's going to be more costly. But the core criteria consists of the following. We have an earnings gap. This can be either a gap up or a gap down. We have an oversold or overbought RSI. Now, this doesn't per se have to be exactly under 30 or exactly over 70. You can give or take, a few points here or there. Just use your better judgment. And then we're also looking for a MACD banana. Oh, and fuck healthcare. Do not play these on healthcare stocks. I believe that is still applicable today. So this is it. That's essentially all you're looking for. So what is this? What does this look like on a chart? Well, and not to mention calls are definitely favored here. Over the years, attempting puts has it's not that it doesn't work, it just takes a little bit longer, and not a lot of people have the patience for a longer time horizon hold. So calls definitely favored for this strategy, but puts work as well. Just be a little bit more cautious when you're approaching the puts. So this is essentially the setup. Now this is Adobe. They had earnings a few days ago. You're going to want to look for tickers that have earnings coming up to play immediately following the earnings for calls. Or you can look back to previous earnings and see if the gap is still there and if there hasn't been any upwards trajectory yet after the gap down on earnings. So earnings gap number one. Number two, we have an oversold or overbought RSI. Now, as you can see here, the RSI for Adobe is not quite oversold. It's pretty close, but not quite. That's where the MACD banana comes in to help you kind of gauge if it's time to get in. Now you can see here the MACD has not started to flatten yet. Now this could happen the next trading day, tomorrow or on Monday, or a couple days from then. But it seems to be the average time to want to be in calls after the earnings gap down is anywhere from day 1 through 5. It's adjusted slightly from the past. In the past, the first day typically wasn't ideal, but as long as the RSI is oversold and the banana is flattened on the MACD, then you should be good to go for calls on the day 1 of earnings. But other than that, anywhere between 1 and 5 is typically a good target window. So all these three things check in. You have a gap, you have earnings, you have MACD, banana, and then you have an RSI. Adobe's not quite ready yet, I would say, because the MACD's not flattened yet. It's still got that downward angle. But that's essentially it. We'll look at a few more. This is PLAB. This is one of the rare puts that actually came to fruition pretty quickly. So this one here, you can see the RSI shot up to almost overbought, not quite, and then it immediately retraced. That's one of the rare instances where puts work on day 1. For puts, it's going to be a little bit longer, and they tend to take longer to come to fruition, just pointing that out. This is Avgo. So this one just went into overbought territory after earnings as of the 13th, as of the 13th. So as you can see here, overbought, there is a earnings gap, and we have a MACD not flattening out yet on the top. So you see here this previous MACD on the green side, you see how when this line begins to flatten, that's when we get these two candles here that marks the reversal. Similar logic here for this one. You want to wait until it starts to flatten out. Now this is a perfect example of what I was talking about when puts take longer than calls, because as you can see, we had a gap up for earnings, and we had a very long time before we had any kind of downward trajectory for Meta. And then when it gapped down, it instantly reversed back up to fill the gap. So that is essentially why you want to play this for calls more so than puts. So that is essentially it. It's not too complicated. The overall win rate on this strategy, so long as you play at or near the money, really you can go in the money as well, but adjusting strategy moving forward, I would probably go at the money, slightly out of the money, not in the money, given the delta blade and the theta and all that. So essentially, that's it. Core Logic. 80.6% win rate as of today. So it's come down a little bit, but it's still a pretty good win rate for, especially for anybody looking to get themselves into a trading rhythm. So that's what I plan to utilize moving forward to get myself back into the swing of things while I build out the rest of the website and while I build out the rest of the Discord group. So anybody interested, you're welcome to come and check it out. Footstop.io, www.footstop.io. And again, everyone in the group, sorry for the long wait. I've been dealing with this court crap, but considering they don't have a case and it's all fraudulent, it's just a matter of time before things are reversed. So y'all have a good one, and I will be making more of these videos moving forward.